Listen.
The more cash flow, the more room you have for mistake making. Because if you don't have cash flow positive, time will kill you.
Grant Cardone and cash flow. Stay tuned. If I can change my life, so can you. Subscribe to my channel and I show you how. Fabrizio Cravero and
Grant Cardone here. Hope you're doing well.
This channel is all about property investment for UK and overseas investors.
Today I'm going to be talking about cash flow.
Exactly. We will be talking about cash flow. Grant Cardone. Many people don't like him, but no one can disagree that he is a great businessman and a successful property investor. Listen to what he says.
The more cash flow, the more room you have for mistake making. Because if you don't have cash flow positive, time will kill you.
And yet, I constantly hear investors, I must say amateur investors, saying that they invest in property for the capital appreciation only. Yes, I do invest in property because the value goes up. Don't get me wrong. I love to invest in property because of the capital appreciation. But I don't base my investment purely on the capital growth. Grant Cardone's shirt says cash flow is king. And I can't agree more. Cash flow is what allows you to be paid while you wait for the capital appreciation. You can't keep on spending money while you wait for the property value to go up. Can you control the pandemic? Are you in Boris Johnson's position as UK Prime Minister? Are you Andrew Bailey, the Governor of Bank of England? I guess you are not. And so you can't control the property prices. Property prices goes up and down. And of course, as wise property investor, you will try to make informed decisions by studying the market, the 18 years property cycle, study the investment area, doing the correct due diligence, but you must invest in positive cash flow properties. And when I say positive cash flow, I mean after you consider all the cost, really all the cost to hold the property, and not only the mortgage. So many investors just check the gross yield. I don't care. I don't care for the gross yield. I want to know the cash flow that the property produces, and then I check the net yield. So how do you check the cash flow of a property? The cash flow is the difference between the income and all the expenses, including the debt. Well, the income is quite easy. It is definitely the rent collected plus eventually extra rent from garage and garden. But what about the expenses related to a buy-to-let property? Pay very much attention to what I'm going to show you now. First, if the property is a leasehold, don't make the mistake that I made myself years ago when I first get started in property. You need to consider the ground rent and the service charge. If you are going to invest in a flat, for example, ground rent and service charge will definitely affect a lot your potential net income. Then, don't forget to take into consideration the void period. Unless you will be extremely lucky, and honestly, I don't believe in luck. Here we are talking about business. It will take you a few days, weeks, or even months to find a new tenant when the previous one moves out. And you must take this in consideration. I must say that if you know how to do the correct due diligence before you start investing, you will actually have multiple tenants wanting to stay in your property. As you can see, I'm always in the privileged position of choosing the tenant. The tenant does not choose me. But few days of void must always be considered, and as professional property investor, you should always consider the worst case scenario, which for me is 1 month per year, the property being empty. I always prefer to be more cautious rather than being too optimistic. And by the way, if you want to learn how to invest in high demand area and in profitable properties, you can attend the free training that I'm going to release soon. There is a link down below in the description where you can register and you will be the first to be informed when I open the application. And next, to calculate correctly the cash flow, you need to deduct the maintenance and the contingency. Remember to put aside some funds every month for the maintenance because the property will need some touch up over the long period. Let's say the carpet may need to be replaced after a few years, or the boiler or the roof, And trust me, when your portfolio will grow to 5, 10, 15 or even 20 property, it is fundamental to have a lump sum aside for maintenance and contingency. That's the way I see it. Once I buy a property, the plan is not to touch my wallet for the rest of my life. The property you are going to purchase should always only put money in your pocket and forever. Another cost you will have when you hold the property is the insurance. And then, if you have a mortgage, you will need to deduct the mortgage repayment. About this, it depends on your strategy. As property investor, you may use an interest-only mortgage, I guess. And if you don't know what it is, I made a video, you can check it up here after this one. If you choose to use the interest-only mortgage, the monthly rate will be lower and that will make your cash flow higher. And of course, if you are a real property investor and you value your time, you won't be managing the property yourself. For me, as I'm investing in UK from Hong Kong, of course I have to use a letting agent. But honestly, even if I will have been based in UK, I won't be managing my properties myself. It is a very consuming task, and I rather spend my time doing things that makes more money for me, or simply enjoy my life and spend time with those I care. And next, as professional property investor, you will then deduct the accountancy fee, and lastly, probably the most hated expenses is the taxes. It depends if you invest under a limited company or personal name. The amount will then be different, but the government will take a slice of your cake, and you must keep that in mind when you calculate the cash flow. So, now you see that the real net cash flow will be much less than the rental income. And now, only now, if the property still has a positive cash flow, then you can consider buying it. This property will put money in your pocket forever. And that's why Grant Cardone says that cash flow is king. Because you will be paid to wait for the capital appreciation. And I'm telling you, not all the properties will give you a positive cash flow, especially if you use a mortgage. I live in Hong Kong, for example, and here most probably you will be losing money every month while waiting for the capital growth to kick off. You should be looking to acquire assets, no liabilities. And when you have a positive cash flow in property, you will have 3 great advantages. First, as I said, the cash flow is going to be your monthly payment that you receive while you wait for the capital appreciation. And that eliminates the fear of running out of money if something unexpected happens in your life, like losing your job or if you have some unexpected expenses, for example. And lastly, a good property portfolio, if built properly and managed by someone else, will give you freedom of time. And time is a limited resource, and through the cash flow that you receive from your properties, you will be able to stop trading your time for money. In other words, cash flow gives you financial freedom. So, Grant Cardone says,
the more cash flow, the more room you have for mistake making. Because if you don't have cash flow positive, time will kill you.
cash flow is king. Subscribe to the channel for more videos like this one. Invest with knowledge, create financial freedom, and I'll see you in the next video.